Hello everyone, welcome to Akira's Academy of Accounting and Finance, and today in your third chapter of accountancy we are going to discuss about the three things. The first one is the adjustment for the revaluation of assets and liabilities. Now you have already done this thing, okay, in your second chapter. But in that situation, what was the case? There is an admission of a new partner. So before a new partner admits into the firm, whatever there is a revaluation gain or revaluation loss of assets and liabilities will be distributed among the existing old partners in their old profit sharing ratio. Whereas in this case, a new partner is not being admitted, but the existing partner, he retires from the firm or he passed away. Okay, in that situation, what we need to do, till the time he is in the firm, whatever there is a revaluation of assets and liabilities, if there is a gain, if there is a loss, we need to share that profit or loss with that partner also, right? Because after that there is a reformation of the whole firm, right? So till that point, now you will be like, why there is a need to do the revaluation of assets and liabilities? See, when we record the assets, how we record? We record it at a historical cost. What is a historical cost? The cost at which we buy those particular assets. Let's say I buy a building, right? Now I buy a building for rupees 5 lakh. And I used to charge depreciation at the rate of 10% on that particular building every year. Okay, now it stands out to be, let's say, 2,50,000. Okay, now this is the cost of building in the books. Okay, this is the cost of the building in the books after charging depreciation. Now when I go in the market to sell that particular building, what I am receiving? I am receiving 3 lakh rupees. Okay, so there is an increased amount of 50,000. So this 50,000 will be distributed among all the three partners, right? So what is the current value of those particular assets and those particular liabilities? It belongs to the existing partners. Okay, so moreover, like there are certain liabilities, let's say there are certain unrecorded assets and liabilities we forgot to record. We sold certain goods, okay, to somebody and we forgot to record it, so that is an unrecorded asset and that person is going to pay to us. So the amount which the firm is going to receive will be distributed among the existing partner. Now when the partner retires, we don't know when that particular data will pay, okay, but he is going to pay, so that particular things will be received by the existing partners. Okay, so the partner who retires, he also have a share on those particular assets, as well as he is liable to certain liabilities also, right? If he took a loan and the firm forgets to record that particular loan amount in the book, so that particular loan amount liability belongs to the existing partner, okay, to the retiring partner also. So whatever is it, if there is a revaluation of assets or liabilities, or there are certain unrecorded assets and liabilities, we are supposed to record them in the books. What we need to do? We need to prepare a revaluation account. Okay, we'll prepare a revaluation account. If there is an increase in asset, what will be the journal entry? Increase in asset increases. Okay, let's say building, here the building increase, the value of building increases. How we need to record it? Building account debit to revaluation account. Okay, to revaluation account. So we will record by building account 50,000. Okay, so if there is an increase in asset, we will credit it. If there is a decrease in asset, we will debit it. Okay, let's say similar case, if the value of the building is 2 lakh rupees, current market value of the building is 2 lakh rupees, we need to show that building at that particular value. So how we need to record it? Building account, we need to credit it. Okay, building has a debit balance, we need to credit it to reduce its value. What we need to debit it? We need to debit the revaluation account. Similarly, if there is a certain unrecorded asset, that also recorded asset, we will credit it, and unrecorded liability, we will debit it. Similar situation when we talk about the liability. So when the value of the liability increases, we need to debit it, and when the value of liability decreases, we need to credit it in the revaluation account. And what we will get, we will either have a revaluation profit or we have a revaluation loss. There will either be a gain or it could be a loss also, and this profit or loss will be distributed among the existing partners, old partners, in their old profit sharing ratio. Right now, if there is a revaluation profit, what will be the entry? Revaluation account debit to old partners capital account. Okay, it will be distributed among the old partners, the 3 partners or 4 partners before the retirement. Okay, before the retirement, whosoever partners are there, that revaluation profit will be distributed among them in their old profit sharing ratio, in their old profit sharing ratio. Similar case, if there is a revaluation loss, that will also be distributed among the old partners. So old partners capital account debit to revaluation loss. Okay, to revaluation loss. This is a loss which we need to distribute among the partners. Okay, and the revaluation account will get closed. So that was all about the revaluation adjustment related to the revaluation of assets and liabilities. Along with that, there could be certain unrecorded assets and liabilities. Now the next thing is the adjustment of accumulated profit and losses. Now let me tell you, there is a balance sheet. How we are doing it? This is a balance sheet, right? This is the capital amount, these are reserves. Okay, this is goodwill amount, there are certain assets. Okay, what we need to do first, we will close this goodwill amount. Okay, we will close this particular account because this is an existing goodwill, this is a purchased goodwill which we need to distribute among the old partners in their old profit sharing ratio. The premium of goodwill which the retiring partner will receive will be given to the retiring partner by whom? By the old partners who are going to gain in their gaining ratio. Okay, that is a different thing. That value is determined when the partner retires, what is the goodwill of that particular firm. Okay, we studied purchased goodwill and self generated goodwill. This goodwill is what? This is a purchased goodwill which we need to close it. Okay, so this goodwill will get closed. How it will be distributed among the 3 partners in their old ratio. Then there is a revaluation of assets and there is a revaluation of liabilities. These 2 assets and liabilities we will revalue. Now in the books, after the retirement of a partner, now in the books they will be shown in a revised value, at a revised amount. Okay, this revalued amount, we will show the assets and liabilities. Now remains what? There is reserves, or there are certain profit and loss debit balance, right? So there are certain accumulated profit as well as certain accumulated losses. These profit and loss, accumulated profit and loss, belongs to whom? To the existing partners. So we need to close these accounts and we need to distribute these accumulated profit and losses to all the 3 existing partners. Here I am assuming 3 partners, there can be more partners, like, okay. So reserves, we need to close these reserve account, and these reserves belongs to whom? To the partners. Okay, so that partners capital account we need to credit it, and we will close this reserves account. So what will be the entry? Reserves account debit to the partners capital account, and these reserves will be distributed among the partners in their old profit sharing ratio. Okay, this balance sheet is before the reconstitution of a firm. So whatever is there in this balance sheet, in the existing balance sheet, will be distributed among the existing partners in their old profit sharing ratio. That's it. You just need to keep this thing in your mind and it is easy to solve it, right? Similarly, if there are certain accumulated losses, we need to, these losses also belong to the existing partners, to the old partners, and we need to close it. What will be the entry? Profit and loss account, sorry, this is a loss, okay? So partners capital account debit to profit and loss account, and this account will be closed. And these things we are not going to show in the new balance sheet, just for your information. These things will not be shown. This capital amount will be shown. The remaining partners, whosoever is the gaining partners, their capital amount will be shown at a revised value. Similarly, liabilities and assets will be shown at a we revalue them, so they will also be shown at a revised value, and this goodwill account will also get closed. Okay, this is how we are going to present the new balance sheet when the partner retires after that. Okay, so I hope you got this thing. We already discussed about it in the previous chapter. You just need to practice, right? Now, what happens when the partner retires in the middle of the year? This we discussed all these things when the partner retires at the end of the financial year, and how we will distribute each and everything. The accumulated profit and losses, it's already been calculated, and we share it among all the three partners. I am again saying I am just assuming three partners, okay? But let's say, what if the partner retires in the middle of the year, right? Let's say the partner retires on 1st of July, okay? Now, it's difficult to calculate the exact amount of profit in the middle of the year, because the profit which we calculate belongs to the whole year. Sometimes the sales is good, sometimes the sale is not good. It depends on particular situations and market conditions, right? But what if he retires in the middle of the year? How to give the profit to that retiring partner or the deceased partner in the middle? So in that situation, what we need to do, we need to consider, there are three cases. We need to consider the preceding year's profit. Let's say the preceding year's profit was 60,000, right? This profit is for the whole year, right? 60,000 was the preceding year's whole profit. But here the partner is retiring on 1st of July. So what we need to do, we need to calculate the 3 months profit, that is April, May and June. Okay, that profit, like we will give profit of 3 months only to him. Okay, now 3 months profit is how much? 60,000 into 3 by 12. 1 3s are 4, 3s are 1, 4s are 15, 4s are 60, right? Okay, 15,000. This is what, this 15,000 is what? It's 3 months profit. Now this 3 months profit belongs to whom? To all the partners. Let's say there are three partners, A, B and C. They share profit and loss in the ratio of 3:2:1. So this 15,000 belongs to all the three partners. Now let's say B retires. Okay, B retires. So his share is how much? 2/6. Okay, 2/6 of the profit will be given to B. So 2/6 of 15,000 is how much? 1 2 3 2s are 1 3s are 5 3s are. Okay, so B's share in profit is how much? Oh, 5,000. So this 5,000 will be given to B. Okay, now we have not prepared profit and loss account. What we need to do in that case? There's no profit and loss account. When we prepare profit and loss account? At the end of the financial year, right? But in the mid of the year, B is retiring. Okay, now we need to credit B's capital account. This we know. To B's capital account, we will give this amount 5,000. What we need to debit it? For that, we need to open a temporary account. Temporary account. What is that temporary account called? Profit and loss suspense account. Okay, B account debit 5,000. So this profit and suspense account, this is a temporary account. When the financial year ends, this profit and loss suspense account will be credited, and it will be given to whom? To the gaining partner's capital account will be debited 5,000 to profit and loss suspense account. This profit and loss suspense account will be closed. Okay, because the partners, the gaining partners, are going to receive that much amount of profit. So this profit and loss will be given, this profit and loss suspense account will be closed, and the gaining partners capital account will be debited. So this is how we will pass the journal entry when the partner retires in the middle of the year. Okay, now it's depend on the agreement, what is written in the agreement. If we have to consider the preceding year's profit, we will consider preceding year's profit. This profit belongs to the whole year, so we need to consider the partial amount, okay, for the partial months for which the retiring partner is there. So he was there for 3 months, so 3 months profit is 15,000, and his share in profit is 2/6. So 2/6 is, that is 5,000, we will give to B. Now there could be another situation wherein we need to consider the average profit. Let's say they decide that the average profit of the past 3 years will be considered. Let's say earlier it was 50,000, then it was in the then it was 40,000, and in the last year the profit was 60,000. Okay, so how much it is? 50 plus 40, 90, 90 plus 60 is 1,50,000. This 1,50,000, we need to take out the average. So average of 3 years is how much? 50,000. Okay, 50,000. This 50,000 we took out the average. Now this is for the whole year. What we need to consider? We need to consider for the 3 months 1,343 to 25,000. 12,500. Okay, 12,500. Now this 12,500 B share will be how much? 2/6. 12,500 into 2/6. 1 2s are 3 2s are 1 3s are 4 3s are 12. 4166.66, like 4167 will be the share, will be B share in that particular profit. Okay, so this again, profit and loss suspense account will be debited to B's capital account, 4167 rupees. Okay, and at the end of year, this account, this profit and loss suspense account, we will close it, and gaining partners capital account will be debited, right? Or else we can pass instead of passing 2 journal entries, we can directly give the effect like gaining partners capital account debit to B's capital account, 4167. Okay, either we can pass this entry, these 2 entries, we can open a temporary account, profit and loss suspense account, or else we can give a single effect. Okay, this could be the situation. Okay, now the third situation could be on the basis of sales. How we are determining the profit? On the basis of the sales. Okay, let's say last year the sales was 6 lakh. Okay, the sales was 6 lakh and the profit was 60,000. So how much it is? Profit is how much of sales? 1/10th. Okay, 10% of the profit, that is 1/10 of the profit of sales. Okay, now let's say this year the profit is 1,80,000 till June, till 30th of June. The sales is 1,80,000. So 1/10 of 1,80,000 is how much? We will consider on the basis of sales, we are considering the profit for 3 months So 1,80,000 into 1 by 10, that is 18,000 is the profit for 3 months. Okay, 18,000 is the profit for 3 months. How much will be the B's share? B's share equal to 18,000 into 2 by 6. 1 2 3 2 1 3 is 6 3 is 18. So that is 6,000 is B's share in profit. We will give 6,000 to B. So these are the three situations in which we will calculate the profit amount when the partners retire or the partner pass away in the middle of the year. So the first could be based on the agreement. They can take the preceding year's profit. Preceding year's profit is for the whole year. We need to calculate for that particular month in which the partner is there till the time he retires. Second situation could be the average profit. Average profit, we will calculate the profit of the past 3 years or 5 years, whatever situation is being given. What is the average profit of the past 3 to 5 years? We will calculate that particular profit we have calculated for the whole year. Mind it, don't consider that particular amount, right? You need to consider the partial amount, right? The part of the months for which the partner was there. So here the partner is retiring in the month of June. So for 3 months he will get his share of profit. So for 3 months the profit will be how much? 12,500, and out of that he is going to receive 2/6 of the profit. Okay, 2/6 his share. This amount belongs to all the three partners, right? Or the third situation could be on the basis of sales. On the basis of sales, like last year the sales were 6 lakh rupees and we received a profit of 60,000, that is 10% of sales, 1/10 we can say. So till now, till 30th of June, how much sales we have made? We have made 1,80,000. So we assume the profit could be 10% of 1,80,000, that is 18,000 for 3 months. And from 18,000 we need to give B share, that is 2/6, that is 6,000 rupees. Okay, what will be the journal entry? We need to open a temporary account, that is profit and loss suspense account, because profit and loss we prepare at the end of the financial year. So profit and loss suspense account debit to B's capital account, and then we need to close this particular temporary account. And what we need to debit it to the gaining partner's capital account, because gaining partner are going to receive this particular profit at the end of the year, right? So gaining partner's capital account will be debited to profit and loss suspense account. Or we can make a combined journal entry wherein gaining partner's capital account we debit it to B's capital account, that is the retiring or the deceased partner. So these are the 3 things which we discussed today. There are remaining 3 things which we are going to discuss in the next video. Till that time, practice these things and get a hand on it. Okay, it's very easy, right? So see you in the next video. Till then, thank you very much.